Hi, welcome to episode 3 of Money Talks. My name is Tanisha Drummond, HUD certified financial housing and reverse mortgage counselor with Homeport. The last time we were together, we were supposed to continue with part 2 of predatory lending. However, I switched channels because I wanted to share some nuggets with you about tax season. Now that tax season is over, let's take a few moments to recap some of the topics discussed in episode 1 and jump right into red flags to watch out for and products to be avoided. So, we identified the distinction between subprime and predatory loans. We also discussed what lenders consider when determining your risk as a borrower and the credit score ranges that qualify you for prime or subprime offers. Additionally, it was said if a loan is too good to be true, it probably is, which is a perfect segue into red flags. Some of you might not want to hear this, but if it's too easy to get approved, say no credit check, income verification, high upfront fees, or the encouragement to repeat or extend the loan, definitely a red flag. If you are unable to build credit with the loan, meaning the lender does not report your payment history to any of the 3 main credit bureaus, so Equifax, Experian, or TransUnion, that should also resonate as a red flag. If the lender is only offering auto pay as a payment option to you, that might be a red flag as well. Lauren Sanders, Associate Director of the National Consumer Law Center, says that no lender can request access to your bank account to collect payments. And lastly, if the lender has a history of complaints with the Better Business Bureau, also known as the BBB, the Federal Trade Commission, also known as the FTC, or the Consumer Finance Protection Bureau, also known as the CFPB, you might want to be on alert. These agencies were designed with the consumer in mind and can be very helpful when determining who to do business with. Now that we know a little bit more about the red flags to look out for, let's take a few moments to discuss the products and services that can be predatory in nature. First up, we have mortgages. If a lender tries to persuade a borrower to enter a loan with unreasonably high rates, excess fees, unfair terms, or the potential to cause severe financial hardship or default, you should steer clear. Next, we have payday loans, which can have interest rates in the 3-figure range. For example, you borrow $400. The fees are $15 per $100 you borrow. That equates to $60 in additional fees and an APR of approximately 391%. Now, let's say that's a 2-week term, but like most people, you can't pay that back in 2 weeks, so you extended another 2 weeks. Now, what started off as a $400 loan has now turned into $520. Let that sink in for a moment. Lastly, we have buy here, pay here dealerships, rent-to-own agreements, tax return advances, and 90 days same as cash, all of which have high upfront costs, typically do not report to any of the major credit bureaus, and oftentimes charge you more than 2 times the amount of the item you have financed. In conclusion, impulsivity can turn an already questionable financial situation into a catastrophic one. Discipline yourself to read the fine print of any contractual agreement, and if you're uncertain or uneasy about the language, please reach out to your local legal aid, or if it's housing specific, one of your knowledgeable housing advisory counselors here at Homeport. Remember, if it sounds too good to be true, it probably is, and while I'm not an attorney, if you move forward with signing a contract that you are unsure of, it is legally binding and you are obligated to fulfill the terms of that extension of credit. If you need help raising your credit score, securing a financial action plan, or simply creating a budget, please give one of our Homeport counselors a call at 614-221-8889 or visit us at www.homeportlearning.org for more information on all that we offer. Thank you for watching this episode of Money Talks, and I will see you next time where we will talk about reverse mortgages and what a heck'em home equity conversion mortgage is.